All right, what's going on, everybody? TGIF, right? We made it. It's good to see that the market is behaving in a normal, rational way too. That's good to see. Things are calming down, and expectations are kind of coming back into line the way they should be. So that's good. We'll take what we can get when we can get it. In the chat, we was just talking about thematics and different themes that are going on right now. And Jeremy mentioned Argentina and European aerospace. Well, I was just digging into aerospace again today. It ties in with my drone plays. So if you look at ITA, it's this U.S. aerospace and defense ETF. And I went ahead and I took like the top 20 names by market weight of that ETF and put them in here. Some of these tie in with the drones that I already watch. And look at this thing on a weekly, and it's pretty amazing, right? Since think of the April 2nd Liberation Day announcement that took us to the downside, and then he capitulated on the 7th and we started running back up. That has been a phenomenal move. So it's pretty awesome. But Jeremy made a good point. I'm looking at US stuff, and the thematic work that I do normally is looking at US stuff because it's what I want to trade, right? I don't want some company over in another country where I have to open another broker and fill out a bunch of forms and have lag and delay to get to some illiquid company in some other nation. Not interested. But when it comes to analysis, if I know globally that the aerospace and defense space is getting a lot of attention, a lot of money is moving in that direction globally, well, that changes the entire perspective of the trade. So just because I don't want to trade those other countries' stocks doesn't mean it isn't worth looking at what those other countries' stocks are doing. So it's a good point. 5 years ago, that would have been more difficult, right? Especially 10 years ago. But it seems like every year we are getting closer and closer to other nations, right? The world is getting smaller every year. So we're able to share information and collaborate, see other countries' stocks and performance. So it's pretty good. It's a nice reminder. I like that. This space, man, it is lit up. Now, for my drone plays, I got them broke down into different groups. And I'll just say right off that I put all of the big names in one spot: Amazon, Google, NVIDIA, Qualcomm. They are all connected to the drone space. But I don't want to focus on those companies from a drone perspective, right? That it's just I have no interest in that. I'm already looking at them anyways for other reasons, right? They're all in quantum, for an example. They're all in AI, whatever. We got a lot of reasons to look at those four names. So if you see my list and you're wondering why I don't have those in it, I do. They're just buried down there at the bottom. There are some OTC stocks on the list, but I keep them in their own little category too. And of course, the ETFs, like the ITA here that we're looking at, it's an ETF. You could do the same thing that I did here with ITA on all of these others. And believe it or not, ARK is a really good space when it comes to this. Not just this, but thematic plays. ARK is a handy resource. You go there, and a lot of times they already have the ETF that you're thinking about, right? Whether it's AI, drones, robots, taxis, whatever it happens to be, it's very likely they've already got some ETF on it. or they've got research papers and articles on it and they haven't built an ETF yet, but they're working on it. Like farm EVs. I was reading a really good paper on farming drones and remote tractors and that sort of stuff. They just don't get enough credit. So I thought I'd point out there the the ITA is really lit. I mean, that has been a phenomenal move. I know I showed this to somebody else earlier today, and they were like, "Oh, that looks like a great short." Look, there's nothing wrong with being the contrarian trader, and you see this, and your first instinct is probably to short that sucker. But um, a good rule of thumb: don't short something that's making new highs, right? Don't buy something that's making new lows, and don't short things that are making new highs. You stick to that, and life's pretty good. Now, having said that, anything that's a low risk entry is worth considering. So if you could short this and keep your risk really small, then why not? Right? I mean, it all comes down to risk management. But when we're talking about habits and strategy and consistent trade approach, shorting something that's making new highs statistically is not something that you want to do, right? You want to kind of break away from that. Now, intraday trading, sure, that's a completely different thing. Today, as a matter of fact, that short off of the high, absolutely, we would want to do something like that, right? That's a completely different thing, which was a part of the discussion today of at least the indexes are behaving normally the way they're supposed to. So what I have measured here was the Globex low to the Globex high, and then we had our breakout. Earlier in the day, to even get this high, I had yesterday's levels measured, and we got up there just like we should. We tagged it, we reversed. It was all really beautiful stuff. But now that we've got enough of today's information, I don't need yesterday's anymore. This has been what I've been using through the day today, and that was a perfect reversal. Usually, I would update my drawings at this point, but it didn't continue. I don't see any reason to update anything, so I just left it the way it is. Perfect reversal. Think about Friday OPEX. No reason to continue to expand. The ticks were kind of soggy. C tick isn't dominant and leading. There's really no reason to expect that we would continue going higher through the afternoon. So, bring in some of those tools. You see the green line, it's not leading. And the AD, the weighted AD, is above 250, but really it's just kind of stalling out, not doing much. And that cyan line, way too high. It should have been buried in the lines here, and it's not. And then the ticks, we keep dipping down into the red zone. We can't get into the 750s, certainly not hitting 1,000. So we just don't have any juice, right? No push, no juice, no fuel, no fire. We're just keeping what we got on the week, right? Not necessarily looking for more. And we are way extended from the weekly floor pivot and the 10-week moving average. So while we could go higher than what we've already done today, I would say at this point, if we try to go higher, we're just going to give it back again. We are like 5% away from the weekly floor pivot. Too far. We've gone about as far as we can go. I have an analogy for that, by the way. When we think about distance from the 10 or distance from the weekly floor pivot, the analogy is consider a runner running up a steep hill. You know they're already struggling because the hill is steep. It's at altitudes, the air is thin, so it's already difficult. If we add to that logic, once we get too far away from the 10, They are running with a backpack and we're adding weight for every step they take. Now, we're not tripping them, knocking them down the hill, putting up roadblocks. We're not stopping them from running, but every step higher up the hill will add more weight and we'll just keep adding weight as they go. As you can imagine, it's going to get really difficult really fast. That's the analogy for price. If we get too far away from the weekly floor pivot or the 10-week moving average, it can do it if we got enough fire or fuel or energy or bullish bias exuberance. We can do it, but we have to have all of those to really get that runner to go, right? Extreme emotion, fear, or greed, something. Otherwise, it's going to stall out, roll back. And that's where we're at on the week. So all we have to do for the week is just hold the line. That's it. Go into the close, keep what we have, and they'll be talking about it as another week where everything has been fantastic. And the world is great. So we're not talking about a sell off, right? We're not talking about crashing and burning. I didn't even get my lower high this week. My higher low that I was looking for this week, didn't get it. That's all right. We don't get everything we want. But I am expecting a higher low at some point. We can't just keep this up forever. And for the 5 bar rule that I talked about this morning, if we close green, then this will be the fifth bar. And we'll be expecting opposite candle color anyways next week because of that. We do have a holiday coming. It's the next Monday, not the 19th, but the 26th. So next week's just a normal week. It's the week after that we have a short week. Yeah, these are some of my measurements from weekly floor pivot distances. Now, these were negative distances. The upside floor pivot distance was less than these, right? And we were turning around at like 6%, 5.5%, 3.5%. So having a 5% move from the weekly floor pivot on the upside, that's rare and it's extreme. It's hard to see us going any higher on the day. And of course, if you knew that in advance, then doing a call credit spread across the high of the day, um, maybe buying puts. I don't think those would really pay you that much, but you could have bought some puts because saying we're done climbing for the day is different than saying I think we're going to fall in the afternoon, right? We can not go up and not fall down either. Just hang out here for the rest of the day. So if you bought puts, maybe they wouldn't pay you very much. But if you sold calls, then you know what you're getting, the credit you collected. Don't have to worry about it. The ask is smaller. The reason I didn't sell any calls this afternoon when we got up here is we still continue to push. When we were at 8:30 this morning setting this high, I was thinking we were already far enough away from that weekly pivot that we shouldn't get anymore. So when we ran up and broke that high, I said, okay, I'll put the drawings on and we shouldn't get past that. And we didn't, but it's already continuing to do what it shouldn't have done, right? It shouldn't have run back up there in the first place and broke out and made it to the green line. So I didn't put on any short calls because this push just keeps pushing, right? So what price should or shouldn't do doesn't always match with what we think it's going to do. It shouldn't go any higher than this. I'm not willing to bet against it though. With all the spotlight on the Middle East, it's one of the reasons I had the drone list this week front and center. Um, JOBY has contracts in Abu Dhabi, I believe, the UAE. Uh, and I believe they've got sole exclusive rights. They're the only ones over there. Um, and then HE is in Brazil, as far as I know. I haven't updated that stuff for a while, but last time I looked, that's what we had going on. So we can see a little bit of push. I thought it would be better than what we got this week, but I mean, it's not bad. On a weekly chart, this is continuing to make that drive to the upside. Drones are still in play, but it's still a little early, all things considered. These guys got 6 years on that contract, and so does HE down in Brazil, or EH. They've got like a 5 or 6 year contract. And you know, people still laugh when you say air taxis and vertical takeoff and landing drones, and it's still just it's not widely accepted yet. So, not expecting the market to really get too excited about these. Just like with quantum names, it's real, it's there, but the enthusiasm comes and goes. Yeah, Joby. I shared a PDF document in the chat. If you guys just search for drone technology, you'll find that PDF. And what I did is I took my list here of this drone technology, all my information, I converted it into a PDF and I put it in the chat. And this work is where I've highlighted contracts. If I found any contracts, I put them in there. So if we look at JLBY, they have a 6 year contract, and they're not just doing the taxis. They're going to be a part of the entire build out, the infrastructure, the charging stations, all of it, right? And they're the only ones. There's the Abu Dhabi government departments establishing the ecosystem that it's going to be a part of, and they're the only ones who have that contract over there. So other EV companies are trying to find their own country that they can be exclusive rights to, which is what EH did with Brazil. Now these guys are doing guided tours in Brazil, but so what, right? They're the only ones with contracts there at the moment, so they've got exclusive access, and they're going to be building out all of the infrastructure down in Brazil. So at the end of this 5 or 6 years, if they haven't killed anybody, it's going to be a much more viable thing that'll be more likely to come to the US. And I think it's going to really get lit up. All it takes is that spark, and then people just all glam onto it, right? Everybody piles in. I want to be in these things before that. And they've got videos on YouTube, by the way, for EH and them drones down in Brazil. It's really cool stuff. I'd like to have one. They're not that expensive. I don't know. Is that the dream job, to be a taxi driver? Uh, Not for me. So it's worth taking a look around, weed out the ones maybe that you're not interested in so much. But yeah, I mean, there's so many parts to the drone space. Some of these companies just provide the metals or the electronics, the connection to the satellite service, software, imaging, sensors, and there's so many parts and pieces. And then, of course, you got the drones that are military grade, and those are the companies that are usually a lot more expensive. You'll see those, and you'll know that you're not looking at vertical takeoff and landing companies. So it's worth a look around. It really came to my, it kind of lit me up when Jeremy was saying Europe, and like, yeah, I didn't even look at Europe and Argentina. Another one that's been getting a lot of attention is the quantum space again, right? It comes and goes. That one really doesn't just dry up and go away. And I should probably weed down my drone list into something as narrow as this list, but there's so many parts and pieces to it that I just keep it too wide. I know I can't cut anything loose. One of these does not have options at all. It's the aluminum one, or ALMU. This one does no options at all. I mean, a lot of these don't have good options, but this is different. This isn't just not good, it's just straight up none at all. And then, of course, we got things like cloud. That is a horrible ETF when we talk about liquidity. So just because they're in here doesn't necessarily mean they're liquid or tradable. But RGTI, that one pretty popular, and Ion Q is another one. So these are fledgling spaces. They don't have a ton of attention. The liquidity is not all that awesome, but you got to start somewhere, right? And again, we got ARC. I thought that was ARC. That's not ARC. ARQQ. I thought ARC has one though, so I'm going to go check because those guys seem to have their finger in, and anything that's new or emerging market, there seems to be an ETF that they have developed that goes with it. Like genomics is another good one. So when you look at the last 5 days, QBTS is up 15%. Some big moves. And what I like is they're not crazy expensive. So with QBTS, we are back above the IPO level, and we're very close to getting new highs in that space. So if we're focused on it from like an investor's business daily, which is how they like to focus on breakouts into new highs. To be fair, though, they also focus on quality names that have a history of strong fundamentals and blah 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 blah. They don't really focus on emerging markets like this, but it's 13 and a quarter. So it could easily double. If 20, then 40, and if 40, then 80, and then of course I'm sure you've all heard if 80, then 100. One at a time, one step at a time. 225,000 contracts traded, and it's just slightly above average. Um, 2.0 would be 100% above the average. So we're not even we're not even there yet, but it just shows it's got liquidity from that point of view. Juicy options. Is there a particular market you guys want to hit today? I've seen a number of people really nerd out on developing their own AI, and you're starting to see it now in movies more when somebody says, "Oh, what was that?" "Oh, that's my own. That's my AI. I have my own AI for this and for that." And it's cool to see that people are really jumping on that, right? So that's pretty cool, right? I think people are creative and ingenious, and they will find ways to make these things profitable for themselves, and even if they can't market it. I was asked about OUST. I gotta say, it's an ugly stock. You know, it's it fits the space, right? A lot of these guys are just really nasty looking when it comes to the stock, but I mean, at least it's not crazy expensive, well below that IPO price. And if we put it on a monthly, we can just see the beat down that it took, and now we're building that base below $20. I would be more concerned if I saw a lot of stock splits or anything like that, which we're not seeing, right? Which is good. If we saw splits, well, there's one split, right? So they did do one. It's not the end of the world. I don't like it that we have that, but can look past it. At the moment, this is just building its range and its base. Once we can get above 16 and we start getting it started, then I would like it more. When we think about what it has to offer, I had to look it up. I hadn't even been focused on OUST at all, but it is a US company, San Francisco based, high resolution 3D LiDAR sensors software. So really cool. It's not the only one. If we look at my list, I've got other software names. RDW is the one that I have, and for LiDAR, I guess I did have OUST. That one slipped right past me, but I knew I had a LiDAR list name, but I don't know this one. I haven't traded it. Over the long term, all of these guys should do good. And the fact that there's not a lot of competition other than Amazon, Google, Nvidia, Qualcomm, right? I mentioned that from the beginning. We always are going to have those, but set them aside. We don't have any other competition when it comes to this space, unless it's OTC stocks. I found a couple of those, or other nations, and I weeded those out. I didn't want them to really take up too much space in my list. So I like these guys, and I think they got a wide moat. Other than that, I would need to learn more about them, who they're who they're doing business with. Are they making these products for the military drones, or are they making these products for the commercial taxis or the drones that are doing deliveries, right? The Amazon deliveries and stuff like that. Are they going to be surveillance, weather, right? Because all of that kind of matters too. But when I look at OUST, what comes to mind is that Carvana stock and that big old beat down that we had, and then the base for like a year and a half. And then we came out of that base and we, you know, like a phoenix rising from the ashes. So OUST, it's beat down like this. Look for investors to come in, preferably in a takeover position. One of those activist investors would be nice. Keep your eye on the shorts. If the shorts start thinning out, that'd be another signal that, institutions are beginning to focus on this more. Look for some big players to start creeping in here, because that's what they'll do, right? They're not going to just put their thumb on the scale where you can see it easy, but they do leave footprints behind. So start looking for those little signals. And you got time, right? We got a few years before I think the drones really start taking off in the US again, other than the hype, right? They all these had the hype a few weeks ago, or not a few weeks ago, a few months ago. So we know that the hype is going to come and go. Don't let that kind of shake you out. Focus on the bigger picture. And I don't know. I think Oust is good since it doesn't have a lot of competition. Maybe it'll get bought out. Huh? I mean, they haven't been around for a long time. It's a good question. Hmm. Poor old Copper's getting a beat down. This was supposed to be one of my 2025 plays, and so far it's a dud. It was starting out really good, all the way up into like March 24, and then it just took a beat down off of that high. It's like a fake breakout fast failure play. And man, nearly all the way back down to the bottom of the range. Now we're holding in the middle somewhere. Nobody wants to diddle in the middle. So we gotta get something done here. But copper is not a good swing right now. Uh, Great if you're day trading in the futures, HG, fantastic moves. But I closed out all of my swing trades in this. I don't have any copper swing trades at all. And BHP, it might be green today, but it's not because of copper. That's not the only thing it does. So, don't be fooled by that one. Copper was my China play. And I mean, that wasn't the only reason, but if you're bullish China on the year, keep your eye on copper. Notice it looks very much like the copper chart that we were looking at. Run up starting at the first of the year, topped out about mid March, and then drop back down almost to where we started. Now it's kind of stuck in the middle, just like copper. It's not a coincidence, right? But the China plays were so crowded quickly. Baba, Baidu, JD, any of those, right? Everybody just piled into those right around the first of the year before they had that big People's Public event in February and March. And then since then, there's been big, crazy moves. And there's been a lot of talks on UNH. So UNH is broken. They were broken even before the announcement came out that they've got fraud issues now, right? They're being investigated on top of everything else that's going wrong with this company. Now they're being investigated for fraud. So the fact that they broke underneath the 400 week already said they were done. That's my line in the sand for a company that I don't want to mess with is, are they below the 400 week? And if we look, well, I don't have my 4 on there. All right, we'll just use this one for the 4. Put it on the 400 week. We are definitely below that, right? And there is nothing good under the 400 week. This isn't any company that gets below the 4 is at risk for losing their spot on the index, for being kicked out of ETFs. I did a search. UNH is in over 100 ETFs within the top 15 names, right? So it's not some random low weight, but within the top 10 or top 15 in weight. All those ETFs are kicking it out. Mutual funds, it was in a boatload of mutual funds. They're all going to be expelling it. CTAs, VC funds, anybody with a non discretionary system, it triggered, they're out. So there's nothing here. If you're looking for a day trade or a short term swing trade, sure, why not? Catch the bounce, run it up for a little bit. You could probably get a third of the way, maybe even halfway back, maybe. But it's a broken system here. And the options are so poor in this thing that when I went to look at them to evaluate them for a trade, I thought, why would anybody want to trade this when there is good things to trade? Lower risk, more quality in the options, not this broken down trash. But it moved really far, really fast. FOMO lit up, and everybody just had to come in and play with it because, oh my gosh, look how far it moved. And they just got to get their fingers in the pie. So, okay, you want to play in the pie? Go ahead. There's always something. But personally, when I seen it, the meat of the move has already happened. And if you weren't a part of it, then you missed it. And now it's all FOMO. Look at that, a million contracts traded. If we look at the sizzle, 1.0 is where we are at the 5-day average. So 2.0 means we're 100% above the 5-day average. We are 137% above the 5-day average options volume, but not share volume. So The shares aren't being heavily traded, just the options are being heavily traded. I talked to Jason over at Vaultland, and he did a deep dive on this. So I wanted to share his take. Let me bring in what he had to say. And to be fair, what I'm going to post is not by me. So if you're watching the replay and you think, that this is really awesome analysis, I didn't write it. So I don't want any credit for it. Let me just scroll back and find it. Volland is a lot like Spot Gamma or Mentor Q, one of those kind of places, right? Only he's blowing those guys out of the water because he's arguing that they are generic and they don't put in the work. You can watch his videos on YouTube. So here's the thread. I'll just start pasting it into the chat with the pictures that went with it. Oh, come on. There we go. So he started his analysis on April 1st. And then he dug deeper and went to the 16th. And then on the 17th, and then we get into May. Now he wrote this on Tuesday the 13th. So in this next post, when it says yesterday, he was referring to Monday the 12th, right? Just to be clear on what day that was. And this is only the options point of view, which I like that he made that distinction in the text that he wrote. He did say, we're not a fundamental analysis company, right? So he says you're not going to see fraud and the the CEO getting shot and all the other issues that were going on. He says you're not going to see that in our data because we're just the options data. It sounds pretty obvious that you shouldn't have to say it, but nowadays I don't think things are as obvious as we would like. So it's better just to say it. That is his thread, all of it right there. There was some comments off to the side, but I don't think they're needed to get the gist of what he was talking about. So at UNH, and this is before the fraud news came in, right? Because that happened after everything that he just wrote. It's broken, it's beat down. Um, if we don't hold this monthly 200, then I don't think there's any coming back to this. And I asked him about the comeback. As I said, well, it could turn into a Carvana. We could base here for a couple of years, and then come back out of it. And his response was, I don't think we're going to come back out of it. Now they are a really big company. It'd be very likely that they, get broke apart into smaller pieces, or, they get bailed out. Somebody buys them, some big takeover, something. They're not going to just disappear. But will they be UNH in 2 years from now? I don't. I have no idea. And if they got bought out, what would that do to the options? How big of a position do you want? And that was my answer when somebody was asking me, "Hey, are you going to trade this on the bounce back up?" I was like, I probably could with a small position because I wouldn't want to go big in this. I don't trade big in something that looks like this. And if I'm going to trade it small, then why am I even going to waste my time with it at all? I might as well go focus on something that is high conviction with a good quality setup instead of this trash. Because the only reason I would trade it is just to be able to say, oh, yeah, I had a position in UNH when it bounced and went back up, but I don't need the bragging rights. So that's my take on UNH and added insight from Volland. The bounce really could go halfway back up, by the way, right? Just start with this weekly candle right there. If we close, which we won't, right? Okay, if we close below, then next week we could continue that drive to the upside and we could hit that halfway point. And we're really extended from the 4 week. You can see we were way down here. So we're mean reverting back like a bungee cord whipping back in the other direction. I don't expect to even get to that 4, let alone get through it. 320 if you're lucky, maybe, in an overshoot, and then we digest from there. In theory, it could go all the way back up to 430 because the 10 is the real mean, right? The 10-week moving average, that's the mean. And if we look at the halfway point for this entire drop, it's at 427. That's really close to the 10-week. That's your mean, right? So in theory, if the drive is hard enough and strong enough and fast enough, it could go up to 430. But it is broken. So just keep in mind this race to the upside, you're doing it in the worst options imaginable for a company that is getting dumped by every VC fund and CTA and ETF mutual fund out there. They all have to get out of it. And they're going to play games with the options while they're at it. So, that's going to muddy the water when it comes to the options trades that we see too. Yeah. Another one was Coin. Coin got hit with that fraud data. Um, well, it's okay. It's funny. Yesterday, when the news came out, it was really negative headlines against Coin. Today, it's more of against a bad actor and a few random employees. So the tone shifted considerably on Coin in 24 hours. But what's crazy is it's still elevated, right? That one down day did nothing for this because it's getting added to the indexes, right? So it's still everybody's favorite until it's added, right? I really believe this is buy the rumor, sell the news. And I think the sell is going to come Monday. So if we look at Trade Flash, Coin hit high of day today, expected to join the S&P on Monday 519, and it replaces DFS. All right, right? It's not a surprise. But that's it, right? And that would mean that Hood and Bull and the other Bitcoin players and miners are likely to take a dip Monday too. We had some pretty good Bitcoin push earlier today. Let's see my notes. What do we have? Nothing to short. Looks like a little weak, but really nothing there on the BTC. Price is a little changed. 103.62. Bitcoin miners with strength: Irene, Riot, Hive, Mara, CLSK. Itawe. So a little something something. And surprisingly, coin. No, that's a fair question. Um, for UNH, I did say it was poor options. I can I can back that up if it's kind of what we were talking about on Wednesday. I guess it's a nice little segue or carryover from that. If you look at the front end options, there's where all your options are, right? Look out a little farther, it gets, a little thinner. And that's not a UNH issue. That's a everything issue. The farther you go out in time, less liquidity you have. We get to the next monthly, and now we've got liquidity again, right? So we can just close up these gold ones since they're weeklies and focus on just the monthlies. We can see liquidity out in June, but really not a whole lot in July. That's really where it's just like the line in the sand. And I expect to see more and more of those leaps dry up, right? The farther out positioning that we would typically see in a hedge fund hotel like this, we're just not going to find it, right? So then when you go in to trade it, you're going to be trading in the front end like everybody else because that's where the liquidity is. $10 wide strikes, right? Between the bid ask is $10. Well, it's 5 now. It's not bad. It's tightening up a little. Now it's 10 again. $2.50 wide strikes. You get into this, and it's going to be violent and fast, much like trading in the SPX. The rate of change in that options price is crazy violent. The overnight gaps rip you apart. So if you want to trade this because of that rate of change, it does make sense. It will change very fast, but that can be for you or it can be against you. It's not uncommon, when things get headlines like this and it gets everybody's attention. Um, and that, everybody wants to get a piece of the pie. The FOMO gets unreal. I get it. I've just never really been a big fan of this, and especially with the prices that you got to pay to even get in here, right? $1,235 to trade that. You know what I mean? That's an expensive option. And if you are using the out of the money stuff, you still got to consider what your break even is or how much move you have for that option to start working in your favor. We're up today 6%. So UNH had an upside move of 6% today. And you can see the options, hey, paid out pretty good. So let's look at one of these. We'll just copy that and we'll put it here. This is that option. Hasn't been alive for very long. At the lowest point today, that option was worth $2.75. At the high today, it was worth 10.02. Wow, that's like a $7.25 move, right? Something like that. A $7 move is pretty impressive. Yeah, bounce rally that we had yesterday on UNH when it went all the way down there and it bounced and started to run back up. Look what that same call did yesterday. It closed down, sure, higher than where it opened, right? It opened at 3.8, it closed at 4.5, it went up 0.7 cents. And if you'd have got it on the lowest part of the bounce from 280 to 450, not much, not a lot of love there. These things, if it starts to get vol crushed on the way up, it's going to crush the value of that option. Options prices are connected to the stock, yes. So when the stock rises, the options are going to increase. And if volatility rises, the options value is going to increase. That makes sense, right? It should. So if we get vol crushed, which we haven't had yet, this isn't getting dumped, but it will. If it holds the bounce and it continues to run towards that halfway point, they're going to knock the volatility out of these options and it will strip any profit that you're earning from the stock moving up, which is increasing the value of your option. They'll strip that out with volatility. So then you end up getting stuck in the trade to where the only way you'll get it is from theta, from time. It sounds crazy for a long option to pay you in time, but it does work that way if you're on the winning side of the break even. So we'll just put that call over here for a moment so we can see it. Here's the break even. And if you're on the right side of it, then as you sit there, you can benefit from that. Now, this is already rising up. So I should have made it more of like a call debit spread. That way it would make more sense. But they're going to strip that volatility out. Keep your eye on, you can add it to your column. It's the implied volatility column. Or if you've got a skew chart, keep your eye on the skew chart. That's a little more nerded out, but I mean, if you got Thinkorswim, it's down in the bottom. It's down here. And you can turn on the skew and just keep your eye on that. You don't want to see them knock the implied volatility out of those options because they will drop drastically. So it will lose $16 for every percent of implied vol. That's a lot. So I don't get too excited when we have these crazy extreme things happen. It's not to say that I'm right or you're wrong. I don't believe that for not even a little bit. I don't like to trade earnings. That doesn't mean anything either, right? It's just I know what kind of risk I like, and this isn't that, right? It's not the kind of risk I like, so I just don't trade it. That's what's so awesome about trading, though, is everybody can choose their own risk. Netflix has been crazy, huh? I can't believe when it was hitting new highs again today because it started to sell off. And I don't know, it seemed like everybody on the internet was like, that's it. It's finally going down. The end. And then what? It bounced and went right back up again. The last time I dug deep into Netflix, everybody was hyping up on the India exposure and it had a connection with cellular data. So Netflix said our exposure into India is limited by their data on their cell phones. If a cell phone company was to start providing unlimited data like we have here in the US, then Netflix says, I think we would do so much better. It seems to me that they solved that problem, right? Because they said that most of their clients over in India, they're not sitting at home per se watching it on the big screen. They're more interested on mobile devices and alternative viewing arrangements rather than that, which is why they needed the data source. It really seems like they solved that problem. The other issue with Netflix that they solved is their subscriber numbers. So at some point last year, I think it was, they quit offering their subscriber numbers. And every stock has a widget, a number that they attach to things. With Apple, it's how many cell phones did you sell? With Tesla, how many car deliveries did you make? Right? There's always some widget for a company. Well, Netflix's widget was subscribers. And then they said, we're going to quit doing subscribers every earnings. I think they mentioned that they would put it in their newsletter or they might do it like once a year, but they just weren't going to do it every earnings. And some analysts said that's it. They're going to crash and burn after that. Obviously, they didn't, right? They're still doing great. Now, they got whacked on the tariff talk for a little bit, but it was off the cuff statement from the president. And when they tried to tighten him up and get him to be more specific in the details, he didn't have any details. He's just like, oh, well, Hollywood's getting beat down. So, if we tax these guys, these companies that are making movies overseas for the US, then maybe Hollywood will get a leg up again. Hollywood's sinking like the Titanic, and it ain't gonna come back just because you go and tax Netflix. So they dipped, and everybody bought the dip. It's fantastic, and it just keeps on going like a juggernaut. This thing is crazy expensive, and I wish they would do some kind of stock split. My belief is if they do a stock split, it'll be when Google used to be, two and a half thousand, $3,000, and they did a stock split, and Amazon was two and a half, $3,000, and they did a stock split, and people bought into it like crazy because that's what happens. You announce a split in popular names, and everybody just piles in and buys the hell out of it. And I keep thinking that that was going to happen to Netflix, and it'd get a blow off top, and that would be done, just like Google and Amazon, and yet they still don't announce, and it just keeps going. So if you put it on a monthly, you can kind of orient yourself a little bit. It makes it easier, in my opinion, to monitor runaway stocks when you put it on a bigger time frame. So with this, if we ask the question, is it done yet? There is absolutely no indication whatsoever that we're done. None. The Some of the things that we can do to kind of gauge is we can measure these pullbacks. And the way we're supposed to do this is we measure the pullback and we say, is the pullback now larger or smaller than the last pullback? If it's larger or smaller, that's supposed to give us information and data. Then we can measure the distance between those pullbacks. And we can set it up higher to say, well, that's where we're going to go next. And we can also ask, was this one farther than this one? Right. So we can do some math, we can do some analysis. And at the end of it, we're supposed to have answers like the trend is increasing, the trend is decreasing, the momentum is increasing or decreasing. And then we can look at the candle sizes and we can add things like the moving averages. These moving averages are uniform. They are spreading out nicely from a central position, just like they're supposed to. Everything neat and clean. They're not jagged or anything like that. Price is holding cleanly above them. And we're not extended from the highest moving average at this point. Um, Probably getting close, but even once we do extend to the average limit, the expectation is that we'll fall back. We will reset and we'll go again because we haven't broke down. So the average right now, well, I don't have an average, but the last one, turn on the label, 13%, 13 and a quarter. We're not even there yet. We've got room to go to reach the distance of the last time we got extended from that level. And on this one, we went just a little farther last time. So probably 14 and a half, call it 15 on that one. So we're a little high. We might pull back, but this trend is solid and it's not slowing down. Even after 7, 8 months, 8 months in a row of green, one red month, and now we're right back into it again. So all-time highs tends to freak people out. It's one of the reasons that I really like Investors Business Daily because they kind of encouraged me to get past my fear of buying the highs. I didn't want to be that sucker, that bought the high and the next day it dumped on my head and everybody's like, haha, you bought the high, stupid. I didn't want that to be me. So I didn't like buying the highs. But if you don't buy the highs in a company like Netflix and it just keeps making new highs, new highs, new highs, new highs, you're never going to get in. And it's just going to keep going and going and going and going without you. So there has to be a way in. IBD likes to lay out those levels and then consider it buy zones. And as long as you buy it within that zone, you're good. And then you expect it to continue to perform and go up from there. We can use measured move just like we do on the intraday. So we can measure this last pullback for an example. The textbooks will tell us to use 1.5 and 2, right? So 1.5, that's our 50%. And then 2 would be 100%. We just passed 50%. So we should expect a pause there. Let's just turn that off. It's just getting in the way. So we measured all of that, and we're now projecting that higher by 50%. And if we keep going, we'll do another 50%. But I would expect to pause here, digest that move, and then make another move again. The the thing to watch for is how far away from the 10 we get. So like down here, we got a little too far away from the 10 and we had to come back to the 10 and get a reset. Then we did it again. We got a little too far away from the 10. We had to come back and get a reset. So if we're getting a little too far away from that 10, it's very likely we're going to come back and get a reset. That'll give you a chance to get in, right? That way you can buy low, sell high, like the t-shirts say, the hats, the bumper stickers. The concern is, oh, well, it's already run so far. right? I mean, put it back on a monthly. It's run this far. Why should we think it's going to continue? And it's a little bit like what they say in science about, an object in motion tends to stay in motion, blah, blah, blah. Well, until this has something that changes its direction, strength begets strength. As long as it's doing good, ETFs will want it, hedge funds will want it, you know, CTAs, VC funds, they'll all want it. It gets increased participation from the big firms and companies. It's just going to continue to make money. The more money they make, the more they can spend to make more money again. It makes more money and makes more money and makes more money. Until there's something that goes wrong, they get caught cheating. The tariffs take away some of their gains. They bomb on a couple of movies, or they get sued with some really nasty headlines. Something would have to change, and it could even be just a bad earnings. One really bad earnings could do it. But so far, we don't have anything. So is it extended? Yeah, absolutely. It's way past the mean. But if it resets to the mean, then it's just another buying opportunity. So you would look for, not when it falls back to the 10, you would look for it to cross the 10 and then begin its move back up again. Like it did back here. It got too extreme. It fell to the 10. You wouldn't want to buy it there. You would want to wait for it to come back up. And if you tried to buy it there, that wouldn't have worked, right? You would have lost that one. But it's a minor loss, it's small. Then you get another shot at the apple, you get a chance to buy it again, and you'd have had that whole run. Now that's a simple MA cross, right? And those are a dime a dozen, and that's nothing. You could tighten that up and use something a lot better. That might be your trigger to go long, or your instigation to go long. Then you go to a smaller time frame to find your trigger. And if you do it that way, then you may not have even taken this fake out, and you'd have never got long in that one at all anyways. You'd have missed that one completely. Then you just hang on and ride it as long as you can ride it. They're way too expensive. I'm going to assume this is way too expensive for anybody to sell naked puts on it in this community. It could, yeah, on the drop down 1,000. If we overshoot the 10, which is why I said you probably don't want to buy it if it falls to the 10. If it overshoots the 10, it's definitely going to 1,000. That'll be at least a 20 period bounce on the 1,000. And the concern is that we got this lower low here. I don't like that lower low, right? When we pulled back here and we set the higher low, that was fine. But then we set a lower high and then we set a lower low. And I don't like that. Now, since then, we ran up and we did put in a new high, fine. But this is still a complex topping pattern. And we need a higher low here to show us that everything's legit. The thing is, you won't know when it starts to fall. You won't know that it's going to be a higher low, and unless we don't take out this low and we bounce and we go back up. But you won't know, right, until it's on its way back up, that really is the higher low. Because for all we know, once it does start to fall, it's just going to keep on falling, and it's going to make a new lower low, which would be bad. But I think we're due for a pullback. Let's use this is my distance from 10. Normally I just leave it on the ES, but we'll put Netflix in here. It was a long ways from its 10 to the downside. But on the upside, 15% seems to be the average extreme. We've been higher than that a few times, uh, even back during the COVID recovery and in the bear market of 2020. too. But leaving those extremes out, 15% is usually the turning point when we get a little wild. When we don't get wild, 10 to 12% is a good turn. We're at 13. So we're past the average. We're not at the typical extreme. We could get 2% higher past the 10 week. But you're playing with fire if you try to run it higher from here, and you're jumping the gun if you try to short it from here. I would want it to do something first, right? Top out and start to fall, or something, right? Otherwise, just in the middle of nowhere. 1,000 easy. If you're looking for a downside shot, something cheap, right? Because these options are crazy expensive. Then I would start with a butterfly on the 1,000 strike, and kind of focus on what would that cost and how long would it take to get there. We're almost at 200, 1,200. I mean, if we fall $100, now why did I go here? I chose 100 for a 200-point drop. The reason for this is if things go wrong. These numbers right now are not showing a market that's in distress. So the measured move of how far we could go is based on, hey, things are great. This is awesome. We're going to the upside and everybody loves it. When that change, and it will change, and we start to fall, these numbers will start to expand really fast. We want to be thinking ahead. So 35 days to make it from 1,200 down to 1,000 flat. And I don't know, you don't know, nobody knows how long it would actually take to make that fall, right? From 1,200 down to 1,000. We made the climb up in a month, four weeks. We could see four candles here. And one of those weeks was the earnings week. So we can come back down definitely in a month. Markets generally fall faster than they rise. A month feels like a good start. Keep it cheap, build a butterfly 35 days out at 1,000 and see what you get. Shouldn't be too expensive. At least I wouldn't think it would be too expensive since we're so far out of the money. I would build it as small as I can build it first just to get the price started. Yeah, it won't even register us at that point. It's still showing a credit. And we know that this is not supposed to be a credit, so there's just no prices out there. There's our 1,000. So we widen it out, make it a little bigger. It's a 20-point wide butterfly for $1 and commissions. This means you're risking $1 for a chance to make basically $2,000. Now I know that's a max profit number on a butterfly and nobody will ever hit that, right? Because you'd have to hold it into the close and then you would get assigned. You don't want that. I don't want that. So we'll never get max. Even getting half would be pretty awesome. Would you risk $4 to make $1,000? Sounds pretty good to me. That's half, right? 2,000 cut it in half, it's $1,000. We can hit confirm and send. It'll show us that same number, $1,996 for max profit. Cut that, round it up to two, and then cut it in half. It's $1,000. Even if you just go for 25%, how about risk $4 to make $500? Yeah, sounds pretty good to me. The wider you can make this butterfly, the more likely it is that price will be somewhere in your target window. But if you're wrong, because you built it so far out of the money, there is no saving this trade, right? A lot of options trades, we can defend them and we can roll them, adjust them, modify them in some way so that they're not a loser. You cannot do that with this trade. If it is a loser, you're going to lose your $4 or $3 or whatever you pay for it. But I mean, come on. You can't get a coffee at McDonald's nowadays for that. At least my mocha cappuccino always costs me more than that. My mocha frappe, $5. Yeah. So if we make it a little bigger, now it's 30 cents and you could work that order because these are not liquid. So I would be working that order and trying to get it for like 20 cents at first. But it's 30 points wide, so that's $3,000. Cut that in half, it's 1,500. You want a quarter of that, it's like 750. And if we chart that on Netflix, let's set the slices first to the break even. And now we set those onto the chart so we can see it with price. It's these two green lines. We would need price to fall down into those zones right there. But that's a really wide zone. And it doesn't have to be there at expiration. If it gets there in 3 weeks, you'll still make money. Maybe 2 weeks. Three would be better. Four would be awesome. Don't get there tomorrow because there won't be any money in it. That's the sad part, right? If this fell and Monday it was here, you wouldn't make any money. That sucks, right? That really sucks. But you wouldn't make any money if it fell there on Monday. But it's not going to fall 200 points between now and Monday, very likely, right? That's how I would play a Netflix short, just for a pullback, right? And really, we're just trying to play one of those, just these little legs back. And if you make it smaller, then the range gets smaller, right? So if we use this other one, now the range is more narrow. But that 1,000 is in the middle of both of them. So that's the midpoint. And I mean, really, risking $4, it's 9 now, but risking 10, 12 for a chance to make, 500, 700, it's not bad. Yeah. All of those really expensive ones like Netflix, Nvidia, these crazy expensive options trades, trying to buy them is just radical, right? I mean, it's so hard to buy a $5,000 option and then, carry it over the weekend. So knowing that we can find alternatives like a butterfly really helps out, keep it cheaper. And you can scatter them. You know, I haven't had a lot of success doing it, but I've I've done it before with limited success that you can scatter butterflies all over the place. Sounds kind of crazy, but you build them to where they're $3 to $5 as wide as you can get them within $3 to $5, and then you scatter them all over the place in the options expirations. So, you got one 7 days and 14 and 21, 28, 35. You just put butterflies all over. You can spend $100 worth of butterflies scattered, all over the place. And as long as you're not doing bullish and bearish, You can cover a wide swath of the downside or the upside, one or the other. If you try to do both, I just don't think you get enough coverage. Maybe if it's a cheap enough company, but then you don't want to do it anyways. Like there's no money in it because you could do it in, like Ford, AT&T, something like that, GM. That there's just no money there. So Nvidia, Netflix, there's money in those. Yeah, ARM. Somebody asked me about it. Like I don't know how expensive is it. ARM's another one. It's $135. But these options, are $1,000 on the put side. Ooh. Finding when it comes to options trades, a lot of stuff worth trading is the boring, sleepy stuff that nobody's focused on. For example, Meta, it's starting to sell off now. But you guys remember when Meta was blowing up at the first of the year and it had that just amazing, gorgeous run and it was doing this and nobody was talking about it? It wasn't on like the Schwab network. They weren't hitting it on MSNBC. They weren't interviewing anybody there. It was, shh, don't say anything. Meta's breaking out. It's running like crazy. Then it got too extreme and they were ready to get out of it. And it was, oh my gosh, look at what Meta did. Wow. You guys should totally buy it. And everybody piled into it and they were very happy to sell you their position because they were done with it. And then down it went. So I don't like finding ones where it's all over social media and it's all over the news and it's in the headlines and deer in the headlights. Everybody's looking about it and talking about it. Nah, thank you. I'm gonna pass. Find the ones that nobody are talking about, or find the ones with really low values. I mentioned Volland earlier. They've got this really cool options scan, and I got a picture of some of this. So you can scan for all sorts of things. I was looking for aggregate gamma, 3 months out. It's a little weird to say these words: least absolute change and like least and most, highest. I was basically looking for negative, the largest negative aggregate gamma I could find. But in the scanner, that's what they call it, is least absolute change. So it's like whatever. That doesn't even sound right, but these are the names that I got. And really it's these right here, top ones, because it's negative 30, 34, 36, 44. So DIA, the Dow, it's not liquid. The options suck. Just scratch that one out. CCL, I like CCL. It's uranium, coal. Yeah, XBI, not really liquid, but it's been headline a lot. And we got Oracle and then 3M. Now, if you look lower, yeah, Roku, Meta, XPev, Baidu, 11, 10, 9, 7. Those aren't bad values. I only looked at the top 10 names. If I had looked at the top 100 names, probably 70% would be less than one. So it would only have this little percentage value. So finding anything greater than like a -5 or higher, that's decent. So top 10. And I was running this scan just looking for things that have a really low delta value. Think of when I do the morning briefings and we talk about the ES and whether or not we are above or below the zero gamma line, right? Just to kind of put some context in the what the hell we're looking at. If we're looking at the zero gamma, that's like absolute gamma, total gamma, collective aggregate. We're above it now. And when we are above it, if we try to rise higher, dealers are selling into that rally. So it makes rallies hard to accomplish. We can do it, but we're doing it with them selling into it the whole time. And if we try to fall from here, they'll buy into the fall. So they'll slow the fall down. It's not because they want to manipulate price, it's because they're trying to limit their risk exposure. And their risk exposure um, is affected by the move because of the zero gamma. So they'll sell into the rally and they'll buy into the fall. Okay. But if we were below zero gamma, flip all of that around. Below zero gamma, when we fall, they sell into the fall and we fall harder. If we rally, they buy into the rally and we rally farther. That's why in bear markets, some of the biggest bull moves we've ever had in the history of trading has happened in bear markets. It's because of that market dynamic. So if you want to find a stock that has the potential to make big moves, you look for a stock that has a very negative aggregate gamma. Now, I can search for gamma, delta. It's got the whole gambit, right? You can search for any of them. But that's what I was looking at. Aggregate gamma, what had the most negative? Because these have the potential to make some really big moves. If we fall, they'll sell into it. If we rally, they'll buy into it. That's good to know. CCJ, no, CCJ's on the other one. That's over here. CCL, Oracle, 3M, right? But then there's the time frame, 3 months. It's not like these are 0 day things, which I could have done a 0 day. I think I have a 0 day. That's a month. Here's a day. Roblox, 20%. Ooh. And look how big the gap is from 20 and then 8. Roblox really stood out. So first thing this morning, if you had known that Roblox had a 20, and that's a positive, not a negative, right? This was most absolute change, not least absolute change. If that was a minus 20, you would have wanted to know that because it meant it could have made some serious moves today. With Roblox at a plus 20, I think if it tried to break out, it got stalled. Let's go see what it actually did do. Yeah, it stalled. It didn't do anything. Every time it tried to rally, they sold into it right at 82. Imagine that. And I bet if we were to dig into its options and its dealer gamma levels and call wall and put wall and all that, I bet 82 is a really big level. Imagine that. It's not a surprise that it's a positive value. Look at the run up we had on the daily, right? So it's a really cool tool. I'm not trying to sell you guys on it or anything. It's just it's a complicated thing, and I'm learning how to use it a little bit at a time, just like everybody else. But it's got some neat aspects to it. So just poking around, trying to find stocks that have highly unusual options values, and then figure out ways to make money on that. This platform is Thinkorswim. Sorry, I didn't see the question. I had it minimized. I like it. So if we look at the list, and well, first, what do you want to focus on? Things that are not going to move. Why would you want to do that? Right? Like this one. Why would we not want it to move? Well, so we can do iron condors and maybe butterflies, right? because we don't want to do iron condors and butterflies on things that have a really big negative gamma value, because it will very likely just run us right the hell over. It won't respect pivot points. It won't respect boundaries. Price will just run and run and run. Find things with a high absolute gamma, aggregate gamma. It's more likely to stall out at key levels, like that 82 in Roblox. And then we can use that data. This was an intraday, but we could have used it for a month. And then we go in and find the high open interest levels. That way we know where is it likely going to stall out, and then build our iron condors on those. See if I have a positive for a month out. If not, I'll just turn the scan back on. Yep, here's 1 month absolute to the upside, and we've got Dell. All right, that works. Dell is not too crazy expensive. I mean, it's a little high, 100, above 100, but not, that's not too bad. It's at 114. We're looking for 1 month out. So probably these June 20s, they'll be more liquid probably than the others. Really nice on the put side. Calls are a little thin. $10 wide in the bid ask spread, $5 wide on the strikes. That's not nice. We'll make do. Oh, these are better. They're $1 wide, but they're not as liquid. There's just nobody home, right? So we can't use them. Otherwise, we have to go way up front, and I don't know, go way up front, right? We were looking at something that has a month of data. So that leaves us out here in the June 20s, and they are $5 wide. And that just sucks, but that's the way it is, right? On the other hand, because we are out this far, we should get a little bit of value for the iron condor we put on. Now we just got to try to identify structure. So we've got the 150 with a lot, 6,000. And 90 with a lot, 13,000. Let's see what that builds out. It's probably not going to be enough money, too far out, but we can build it and see. 50 cents. Yeah, no. So this is a $5 wide iron condor. That basically means the entire trade in aggregate is going to amount to $5. If we sell to open this for 50 cents, that's what we'll get out of it. What are we risking? The other part of that $5, $4.50. I don't want to risk $450 to make $50. Now they'll tell you in options 101 that because of the high win rate, and this does have a really high win rate, it's got a 95% chance of winning on the call side, and it has a 91% chance of, actually a 93% chance of winning on the put side. High 90s on each side, right? They'll tell you it's acceptable to risk 450 to make 50 because of the high win rate. And we've got a little bit of edge because we know that it has a really high positive gamma. So the dealers will be working with us in this scenario. But So far, they haven't slowed it down at all, right? It's made some pretty big moves in the last few days. 14 points in a week. Pretty big move. That was going to be my next question. And then we got to worry about earnings. So the earnings right there messes with it. Probably why the June contracts are off. I don't like it now because of the earnings. Should have looked at that first. Wasted our time. So here's the scanner. It's pretty neat because I can stack them up and lay them out into different time frames. So I've got day, month. At some point, this will wake up and we'll be able to move it. Three months and then 1 year. All right, now I had the quantity higher because I was looking for a specific name, so I needed to see everything on the list. But normally I don't set it to 100 because a lot of I don't want all this slow, really low stuff. It just doesn't do any good, right? So keep it at 10, maybe 25. But when you're looking for a name, well, then put it as high as you can to try to find the name. All right. So we can see 1 day Dell negative because I've got least and then most. Here's the most 1 month, 1 day. Swap that around. Got a month twice. Guess we'll use that. Put this one at 3 months, which is a quarter, right? All right, so there's our positive aggregate gamma. Roblox, Dell. If we go 3 months out, neither one of them are even on the list. And a year out, the indexes and Apple. Yay. Okay, that's not helpful. Devon Energy, Roblox again. There might be something to that Roblox. Let's go back and look at that again. Yeah. I mean, I know it's on the day one, right? We already talked about the day one. It flattened out 82. Yay. But it's also on the higher one, too. So it's got a little bit there. But it's at 12 instead of 20. So we'll take a look at the options, see what we got. Same situation. We need to go out a month because we're looking at 1 month. $10 wide on the bid ask spread, $2.50 wide on the strikes. That's better than the last one. There's volume looks really nasty on the call on the put side, and the calls don't look much better. So this is that's rough. Yeah, that's junk. That's junk. Top to bottom, midpoint. We're there. We are there today. $5 wide, vertical, out of the money, call, credit spread, or short call vertical. Uh, what else do they call this thing? Some crazy bear call vertical. Yeah, that's what they call it. $1.26. It's supposed to be $1.66 if we want 1/3 the width. So we don't have that. We would want to adjust the strikes forward one strike. Now we're at $1.83. We only needed $1.66, so that gets us what we need. 1/3 the width of the spread. The break even would be, let's see, basically 87.5 minus 2. That's 85.5. 85.70. Let's see if we get that right. Oh, 84.30. Well, I missed that by a dollar and a half. So we would need the stock to close below 84.33. Which it already is below that. It just needs to stay below that. One thing that's going to help us out in this move would be the implied volatility getting crushed. I mentioned this earlier, right? And you can see it here as the stock ran, the implied volatility got crushed, and then it had earnings and it really got crushed because that's what happens at earnings, right? It takes those vol crush, like right there, there. So as this was running, it was already losing its vol. And then we got crushed for earnings. And now we're expecting to lose it even more if it continues to rally. If we don't rally and we start to fall, we could start gaining implied vol. That's not what we want if we're selling, right? If you're going to sell a vertical, one of the reasons they tell you to look for something that already has high vol is this it's kind of a broken logic, but what they say about volatility is when it's at the highs, it has nowhere to go but down. And we know that that's not true. It can go higher, right? But that's what they say. And if it's at the lows, it has nowhere to go but up. We know that that's not true. It can stay at the lows and it even can go lower than the current low. But that's what they say. If it's at the lows, it has nowhere to go but up. So when you go to sell a vertical, you want to check the IV and see if it's high or not. Because if you sell it and it's low, and then it starts to rise, your options are not going to decay the way they're supposed to. They're not going to lose value the way they're supposed to, time will remove value, and that's what you want. But at the same time, the VIX is putting value back in it. So then your options aren't decaying. And then you're stuck in there waiting until we get close enough to expiration that the theta curve gets really steep, and then the options prices outrun the implied volatility prices. Your theta curve looks a bit like this, and you can see how it starts to get steeper here towards the end. You would have to hold it until the rate of change gets really steep so that you can outrun the amount of volatility that's being pumped into it. So they say try to find something that already has a high volatility. That way, when you sell it, maybe it doesn't lose any vol, maybe, but not losing vol won't hurt you. And if it does lose vol, perfect. That'll help your trade lose money faster. And that's what you want it to do. You sell it high, you buy it back low, you make your money. So you want it to lose money fast. With Roblox, this thing is already beat down. It's already lost all of that vol. It likely isn't going to lose more vol, which would be helpful if it did. And it's either going to hold the line or it's going to go up against us. That wouldn't be a big deal if we were risking like 20 solid $20, right? If this was 50 cents wide and we sold something for half of that, then so what, right? Small risk, small reward, not a big deal. We're not going to be too worried about it. But when it's, you know, $325, well, you want to risk 325? You want to have some edge in there to risk 325. What's your edge? That it has the high aggregate gamma. Cool. But so far, we've only seen 1 day of that. We can say the edge is also the idea that we hit this major monthly halfway point. Cool. But it hasn't responded to it yet. So maybe we want to hold off until it actually shows us that it knows that line is there, respects that halfway point. Yeah, IVR is the other one, if that's what you're asking about. It's rank instead of just IV. Um, I mean, you can nerd out on it if you want, but if we go into the option statistics here, you got this IV percentile right there, current IV percentile. That's close enough to rank. It's not rank, right? But it's close enough to rank that you could just do that. The way that I like to teach people about rank, especially if you don't have a lot of different tools, is to just look at a daily implied volatility on a 1 month, excuse me, on a 1 year daily chart, right? So here's 1 year. Yeah, 1 year. Lay it out like this. Where's the high? That's like a dollar bill. That's your $1. And then lay out the low. And if you think about if you have a dollar and I take all of it, what do you have? Nothing. So there's your zero. In between these two numbers, where's the halfway point? Your 50%. So even from just that right there, are we above or below the half? We're below the half. All right. So now within this range, where's the half of that? Yeah, right there. Are we near that? Yes. Then we're at about a 25 rank. Anybody can do that, right? Like you're just ballparking it. And if I was to turn on my rank indicator, IV rank, it would be very close to that. 22, 25. Does it really matter that it's 3 points off? No, it's close enough. So you can always get your rank level. Now you could have done the math, right? Get the exact number that's 0.96 and this is 0.26, right? And you could do that and do the math and get the calculator out, but come on. Close is close. Close enough, right? So if you're selling things for premium trades, whatever, you may want to find things that have a higher implied vol or a higher vol rank. What I don't subscribe to is finding things that have the highest. And that's one thing that they say a lot on YouTube is, oh, yeah, run a scan and find the things with the highest implied volatility. No, 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 don't do that. Because those are the ones that are usually going to make a really big move, just like this did, right? You don't want to sell an option on something that is about to make a really big move because it can very well have gone the other way and run you over. So find things that are elevated, sure, but not extremes, and preferably find something that's moving in the right direction. That the IV in our case would be falling, not rising, right? That way, you know, if you sell the option and the IV is falling, perfect. That's what you want it to do. And to be fair, this is falling. It could continue to fall. Maybe we just paused here for digestion, right? And it still has room. It can go down to the zero point 0.3 for all we know. If we sell the call and this falls more, that will help us in our trade. Make more money. Make money faster, not make more money. Say it right. So one thing you can do is when you have your watch list, is put that IV number in your watch list, and that way you can sort them by rank. If it's low IV or low IV rank, whichever one you choose to use, you can buy low IV rank, like buy calls, call verticals, buy puts or put verticals, and then sell the high ones, sell to open. It's funny we got two of them here. Let's see what this one. Why is it modifiable? Okay, just daily logics. Now, if you didn't catch it, I'll say it again. When it's low, you want to buy the option. I don't mean just calls, right? You can buy calls or puts, but you want to buy options when the IV is cheap. You want to sell options when the IV is high. But to normalize, how do you know that zero point 0.5 is high or low, right? I've got a zero point 0.4 right now. How do I know that that's high or low? You got to bring it up on the chart and get a comparative reference rank. How's that for nerding out on a Friday, huh? Campbell's Soup used to have one of the best IV rank plays that I had ever come across, and it was the best for a long time. And then it finally broke the pattern, and I don't know. I quit looking at it after that. But yeah, back in the day, it was like just textbook perfect. And you would get these little like mid. Here's the earnings, and here's that earnings. You'd get the dump, and you'd get this rally, and then you'd get another drop, right? Like these little mini runs. It was nice. This was always really good for like diagonals and calendars. This is awesome, but all things has to come to an end. I haven't looked at Campbell's in a long time. So that's what I got for you guys. Unless you have questions, let's wrap it up and start the weekend. I mean, obviously, we got to work through questions, but yep, yep, you too. Everybody, be careful, be safe. If you do have questions, just hit me up in the chat. I'll probably get to it Monday.